Welcome to the Big Fat Real Estate Checks podcast with Marco Kozlowski, where we help investors like you get the knowledge and skills you need to replace your JOB with passive cash flow for life.
Hey everyone, welcome to Big Fat Real Estate Checks. This is Marco Kozlowski, your almost fearless leader that used to fear everything, but now loves to learn new things and be stretched, with Francesco Galuccio, who is freezing cold in Toronto, but I think getting his heater fixed today, and Gabriel Araiz, who is now claiming he's now claiming that he is a resident of Florida, has his driver's license and everything, and is official. So welcome to the club, Gabriel, and Frank is still out left in the cold and alone.
If there's any consolation, I do have a Florida license, so yes, I'm halfway there. Yeah.
But where do you actually live right now? Where do you stay, Frank?
I'm in Toronto. Yes.
He's in his basement.
But in my thoughts, I'm in Florida. There you go.
Yes.
He's in Toronto.
My thoughts and prayers are with you, Frank, and your family. Yes. So again, a little sidetrack. Welcome to Big Fat Real Estate Checks. This is a podcast all about giving you extreme value on how to develop your skill sets, your understanding, and just your general knowledge base of how to increase your wealth by using asset-based lending, by buying assets without using necessarily your own money, but leveraging tools and I guess resources that are available to pretty much anyone that know how to use it. And the more you learn, the more you earn. And we want to empower you with some knowledge that you can use as much as you can. And if you decide to really do this business, if you really want to shine and get results very quickly, you'll make the good decision to join one of the events that we have, so we can help you and mentor you into buying as many assets as you want and really applying these skills perfectly. Now, today we're going to continue the discussion from our other two previous podcasts, which were partnerships. We talked about partnerships and how we choose our partners. We talked about Murphy as a partner, that we really don't like. And we're now going to talk about the other partner, which you have whether you like it or not, which is the IRS. And if you spell THE and then IRS, the IRS, you put that together, it spells theirs. And that's how the IRS sees things. It's theirs. So remember that the IRS is a partner, and they will shoot first, ask questions later. We can ask Frank, as he was part of the Canadian mafia, IRS, which is the CRA. And we will dissect into the real partnership that you have. And if you play by the rules, you're actually going to be way better off. In fact, those that don't play the rules are the ones that are hurt the most. And we don't learn tax strategy in school or in any medium. Even accountants, that after a lot of schooling don't necessarily know all the ins and outs that are possible unless they really deep dive into the tax code. And I think it's a very small little, it's a leaflet, right? The tax code, it's like just a little pamphlet. Oh, yeah. There's really not a lot of information in there. And I know everyone reads every page, every day. But the tax code is pretty daunting. And the tax codes have been written by the wealthy to protect the wealthy, but you don't have to be wealthy to play by wealthy rules. You just have to understand what to do in order to benefit from the rules that are already there. As long as you play by the rules, you're fine. And if you do play by the rules, you can actually pay very, very little tax, almost close to none, if you know what to do. So which will result in you becoming wealthy. Exactly, because it's not how much you make that matters; it's how much you keep. And if you're giving away most to the governments and shit, you're not keeping much, and it's putting you in a position of weakness. And the more you keep, obviously, the better it is. So that's enough of a long ass introduction. Let's get into Frank. You're the expert. In Canada specifically. You know the ins and outs, and you know this game very well. I think you might be going through something now yourself, so it might be apropos, or maybe too soon. A little too soon. Maybe there's something you don't want to talk about. But,
no,
the wound. It's still wounded. It's fresh, the wound. The
IRS and the CRA. Yes, obviously they're tax agencies for the same purpose. They have the same objective. And listen, I'm not against taxes. Taxes does do good. It does, fund social programs and infrastructure and things like that. But it goes into pockets as well, and careless spending. But from a as I worked with the CRA, as I worked as a collection officer, a senior collection officer there, my mandate was the bill was already issued. There's no jury, there's no judge. They issue your assessment or reassessment in that case, and then we just collect it. And you have no say unless you have someone on your team, like a professional specialized CPA that knows and went through the IRS code book and see what I wouldn't even call them loopholes. There's tax avoidance and there's
tax evasion,
and there's evasion. Avoidance is not illegal. All right, so there's different mechanism, and they put in the code, in the IRS codes, where you can reduce your taxes. One of them I think we discussed at code 1031 in the IRS is hey, if you sold an asset and you have capital gains, you can defer that capital gains by following the rules in regulation 1031 of the IRS. So there's mechanisms in there, and for the average Joe is not going to know that. Like you said, the average accountant, bookkeeper will not know that. You need to go to a specialized CPA firm that knows specifically exactly how to do this. And yeah, I was caught in a little bit of rut as my business grew, and thankfully it did. I'm blessed that it has, that I'm in that situation. But I paid quite a bit of taxes on both sides of the border because I am foreign national. So I paid a lot to the IRS, and I paid even more to, not even more, but I paid additional to the CRA. Most countries, if you are, a foreign national, they do have tax treaties where if you paid a certain country tax like the IRS, you get to credit that amount within your respective country. But I'm not going to get into that.
Well, you do in Canada. Sorry to interrupt, but if you pay business tax in the U.S., then they take that credit, whatever the difference is, you pay in Canada.
If you set up correctly. If you set up correctly.
If you do an LLC, for example, as a Canadian citizen, I had this happen where I went to a seminar. They said, yeah, I do an LLC. Everyone does an LLC, and I'm a Canadian, and I have do a single member LLC as a Canadian. Everything is flow through. So the U.S. government sees an LLC as a flow through to personal. So now I'm paying personal tax as a foreign national. So it's like 40% And then the Canadian government says, well, wait a second, you paid the IRS that percentage, but you didn't, because we see this as a business tax
entity.
Business entity. You didn't pay the business tax. So guess what? You're going to owe me 45%. So I got like $10,000 on what I was supposed to get $100,000 because I didn't understand the rules. Right. So anyway, Frank, sorry.
No. That's a very valid point. And
so my two partners took 90% of the money because they are my partner. Right. And Absolutely. I could not pay them, except I won't do well in orange, and I will drop the soap.
Yeah. Yeah, but on that, you're absolutely right. Some country tax agencies won't recognize entities that are in the States. I know the triple LP, the limited liability, limited partnership, which was formed in I think initially in Florida, but it's recognized in the U.S. as a limited partnership, but Canada doesn't recognize the CRA. There was a whole thing on that, and people that registered that way, they were grandfathered, but anyone that did it afterwards, it's you're going to be double taxed. And that's what happened to me, not on the LLP part of it, but the way I structured initially wasn't wrong. It was not wrong. It was correct. But once you hit a certain threshold in income, you have to change your business structure. And I didn't realize after when as we started accumulating assets and we made money, thankfully we made money. We realized shit, we were over that. There's income brackets for a certain level of incomes where if you're over X amount, you're going to be paying 30%. If you're over X amount, you're going to be paying 40%, and X amount you're paying 48% or 50% taxes. So we breached that line, that bracket, and the way our structure was. We ended up paying quite a bit to the IRS and to the CRA, and almost like your story, Marco, you end up, holding 10%. Meanwhile, everyone got 40 and 40, and you're like, "What the heck? I did all the work," and you end up with 10%, which is devastating when you look at it. You're like, "Shit, I got a big tax bill," and you do have to pay it. You do have to pay
it. If you don't have real partners too.
Yeah. Well, if you have another partner, then you have to split that 10,000 into 5.
That's it.
Maybe that's a night out. I don't know. But in the end, so you have to pivot, and I did. And thankfully for Gabe, he introduced me to a very reputable firm that restructured my entities. So you pay your fair share of taxes, from a corporate or limited partnership perspective, but at least you're left over with like anything you do pay will be credited properly, like 100%, and anything that is left over is yours, where you're not, giving it to the IRS, because the IRS will take it. And they'll charge you interest and penalties on that. That's what happened to me. I got shot every angle.
But you're still here to talk about it. It's right. Only money, and you'll just make more.
It is. I got dinged even for a late filing penalty because I didn't know I had to do installments, because they said, no, Frank, you did too much. You have to pay us in advance every quarter, right? And I didn't know I had to do that because I hit that threshold, and I got dinged on that. So just be aware that if you are getting into this, depending on what the income level is, yes, you may structure one way, but as you keep growing your entity, your empire, you're going to have to pivot and do something different.
So I just want to be clear that these are rich people problems, right? So, I don't want to dissuade anyone from getting into the business because you have to pay taxes, because I actually have heard people say, I don't want to give the government any more money, so I'm not going to do this business. Wow. In fact, you want to pay millions of dollars in taxes and keep hundreds of millions. So it's a partner that you have to be aware of, is the moral of this. I don't want to instill, scare the shit out of people where, this could happen and they go to jail and blah, 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 because I didn't know.
No, there's always started off saying, right? Taxes is good. Taxes is good. It does pay for social.
Your agency allowed you to do what you're doing now. So and the tax agencies are people that work there that are just following the rules. That's all, right? So, and sorry, Gabe, 1 second. So I just want to be clear that Frank started with doing things, growing, realizing that there was a problem, and then having the capital to fix it because of the situation that he's in. So and what most people do is they hear, oh shit, Frank had something he had to pay. I won't have the money to, because they're putting themselves back in the situation that you're in now, perhaps, where you don't have the money to, put one foot in front of the other. I've been there, done that. I think we all have at one point in our lives. Maybe not Frank, because he's, pretty savvy, but I've been down and out, and I go through cash flow gaps constantly. I talk about this with them. I'm overstretching myself, taking risks. Even now, I don't want to talk about it right now, but anyway. So there's always something that I'm doing that's like, why am I even doing this? Because it's the thrill of the hunt, is to do something that I didn't think I could do. But anywho, it's just know that it's only money, and if you make enough, you can clean it up. And just do it, make money, and you'll make enough money to clean up the mess if you do it right. Just know that. And I'm sure if Frank, whatever the tax bill was, or whatever it was, had he known that he would have that problem when he first started, he probably wouldn't have started, because it would be an ungodly amount of pain in the ass and money that would have scared the shit out of him to even get going. So just know that you're going to be fine as long as you're aware of the rules in the IRS, and if you're in a different country. If you set it up right, you'll not have double taxation. In fact, if you do it right, you don't even have to pay that much tax if you set it up right. Gabe, go ahead. I'm sorry. I'm leaving the room now.
It's okay.
I'm done.
No, that's fine. I was just going to say that just like when you get when you partner up with someone, before you enter this partnership, generally you have a shareholder agreement, right? And the reason you do this is you spend maybe a couple of $100s on the shareholder agreement to protect you and to protect your partner. So, if this happens, then this is the solution. If that happens, this is the solution. It's just, that's how you protect yourself from future problems. Because if you don't have a shareholder agreement, you're going to move forward, and eventually, your business is going to grow. You're going to make a lot of money, and then all of a sudden, a divorce happens, either you or your partner, whatnot, and then that's when shit hits the fan, and all these costs come and get into play. It's the same thing with the IRS. The only difference is that they're going to be your partner from the get-go. So, what Frank did was he had to fix a situation that he either didn't think of, plan properly for at the time, maybe didn't expect to grow, the way he did. And that's fine. And yes, he did have the money to fix it, but fixing something will always cost more than building it right. So I think the mindset here needs to be, if you want to start a business, then start it right. The IRS is going to be taking a piece of everything. So structure yourself right from the get-go. And when you start, it's cheap because you have nothing. It's going to cost you an entity. It's going to cost you very, very little out of your pocket to get started the right way. So build the foundation correctly of your business from a structural standpoint, and you'll be fine. So I did the same thing. I had to restructure. I'm changing countries now. I got to restructure as well. And I'm a CPA, and I made a it's just messy, right? So I had to fix everything, and yeah, there's cost to that. I'm okay. Thankfully, I'm good. And again, fixing things will be more costly, but if you have the money, then it's fine. It doesn't matter. It's just money. But if I have a piece of advice for you, it's just do it the right way from the get-go. You have us to tell you, what's going to happen. So so do it right from the get-go. And it's really cheap to get started the right way. It's that's just up to you.
Actually, I just wanted to add that I know, Marco, you had a point, but I did start off on the right way initially. I didn't create my own entities. We got an asset protection lawyer to structure it. It's just when you hit a certain level of income, which again, I'm blessed that I even hit that level, and I didn't even think about it, 5 years ago or whatever, that I was going to hit that level. But when you do, be prepared to pivot. So I don't see it as a cost. Yes, it was expensive. It was a few $1,000s to get the CPA firm to restructure, but that is an investment, because whether I spend $3,000, $4,000, $5,000 or $6,000 to get a new structure, I'm going to save that tenfold on taxes this year for my 2021.
And guess
More
what?
than tenfold, actually.
When you invest in this structure, that's also tax deductible. So the IRS will credit you for investing in properly structuring their system.
So those that have the capital to structure correctly should when they get started, right? So if you're in a situation where you want to buy as many assets as possible, which you should, if you understand and have the skills, which we teach, how to buy assets at significant discounts, use asset-based lending to put debt on these properties. And it's the down payment that we need is the equity that we've created by our negotiation. So it's not cash that you need, it's the skill set to reduce the equity portion. So if you're buying it at 70% off, that 30% discount is your down payment, if that makes sense. So you don't need cash, because it's not based on the purchase price, it's based on the value. And that asset will generate income that, will trickle down, and you have the right structure. Now, also, I'm sure there are folks that have been in my situation. When I first started, I didn't have 2 pennies to rub together. I would go and buy a 99-cent menu at McDonald's for my family. I had 4 kids. I could only buy 4 because I couldn't eat, because there's tax. There's tax on the 99-cent menu. So I've been there, done that, got the t-shirt. And I've also heard, well, I'm not even going to start buying real estate until I can afford the proper structures. If you ask an attorney, that's what they'll tell you to do, because they're protecting their attorney license. If you're asking me from an entrepreneurial standpoint and as a risk taker, because you've got to do something to get something. You got to give up something in order to get something. Nothing ever comes with no cost. It's either going to take time or risk, or you just have to give up your old life to get a new one. You just got to give up something to get something. Just how life works. The rule of karma. So if you have no pennies to rub together and you learn this process and you actually get money now the question is, you get cash at closing, you get cash flow. Do you need that money to live, or do you need that money to protect yourself from something that could maybe happen in the future and not pay taxes? So the question is it cheaper for me to do an entity so I pay less tax later? Or is it cheaper for me to do something else? So you have to just off-weigh the costs overall. And if I was starving to death today and I got an asset, and if I could take every dollar that asset made so I could save forever on taxes, I would continue to starve to death, put that money back into that asset, because I know that would be the last year that I ever have to starve. If that makes sense.
Yep.
So just because you have something that's coming doesn't mean you have to take it and cannibalize it and put yourself at more risk. I did it. I'm going to still starve for another year. I'm still going to go to McDonald's if I have to, just, or do whatever I have to do to take care of my family. And then once that cycle is over, I know I can pull out the cash necessary to structure it right, pay less taxes, and now start playing by the rich rules, and never have to pay taxes again or double tax, or reduce my taxes significantly, by 80, 90% if you do it right. Anyways, that's just what I wanted to share.
And it's not even about paying taxes. I think that the real risk isn't about paying taxes. The real risk is just about how much tax you're going to end up paying. So that's the thing is you're 100% correct. It's just do it, even if you're doing it personally, because it only takes one deal. At least if you follow what we've been teaching, it takes one deal, and you'll be able to just create your own little structure, and your property is going to pay for it. 100% get started. That's the most important. But if you do have the means to do it, then structure yourself from the get-go. 100%.
Do it right if you can, and if you can't, just do it the way you have to do it to put food on the table and take care of your family forever. And but if you don't do it, nothing will ever change, because no one's ever made millions doing nothing.
Yeah,
agreed.
I know when I was working with the CRA, and sometimes I would tell stories without releasing any names, no conflict of interest and confidentiality. But I would say, I worked on accounts over $1 million. They owed over $1 million, and like people are like, oh my goodness, poor them. It's not poor them, because if they owe $1 million in taxes, they made probably 10 million. And that's the point here. It's taxes is not a bad thing. It's just obviously you want to try to reduce your exposure to it, and setting up the entities. A corporate entity is going to pay a lot less tax than a personal income tax. Personal income tax is the highest tax bracket that anyone can pay. So just knowing the rules, getting the help you need. But like Marco said, if you don't have the money to do it now, it's okay to put your, to pay a little bit more taxes just to get you going. But as you get going and you acquire more assets, do yourself a favor, invest in that little bit of money, get someone to help you, and you'll thank them for it, because you're going to be you'll be keeping more at the end of the year.
Yes, and it's taking care of your partner the right way, because the partner is going to take their money whether you like it or not, right? It's the IRS, theirs. So, and they have that attitude always, and it's only theirs by their rules. Same thing, right? So play by their rules, and you're going to keep more. And at first, you're going to have to make a deal with the devil, like we all did. We've all had to make that deal, and it pays off. Gabe, final words?
Yeah, I was just going to say that it's an investment that's going to pay for itself, because just the amount of taxes you're going to save moving forward is going to pay your initial investment tenfold, if not more. Yeah. So
17.6 fold the first year.
Yeah, 6.3. Yeah,
0.2. Thank you, gentlemen. I appreciate it. Always have fun, doing this. And who thought that the IRS talk could be rather fun to listen to? I don't think I could ever be excited about taxes, but it's always fun. And so do it. Remember your partner. And if you have to pay your partner more the first year just to get into the business, well, fuck it, get it done. The second year you pay less, the third year you pay, and as you start making more and more, your partner will be phased out, never completely, because everyone has to pay their fair share. I don't believe in not paying your taxes. I think it has to be done to contribute. However, just play by the rules and pay the least amount legally possible as opposed to the most. Because as an employee, the tax burden of the country is on the employee. They pay the most taxes percentage-wise. And the business owner, if they do it right, pays the least. That's just how the rules are. So be a business owner, shift from employee to business owner, so you can have others work hard, or money work hard, or tenants work hard, so you don't have to, and you can enjoy your life. Because this is the one life you have, so do the best you can with it. Appreciate you both, Frank and Gabe, and of course the listener. Like it, love it, share it. If you are not familiar with our programs, please go to MarcoKozlowski.com or Marco@MarcoKozlowski.com if you want to join one of our next upcoming programs to learn how to buy asset-based entities, to get involved in asset-based loans, to buy assets that cash flow, so you can make cash flow and the spread between what the money costs you and what the property makes, and using the equity as the down payment, not your cash. And it's a lot of fun. We've all done it. We're going to continue to do it, and we want you to do it and thrive. Thanks, guys. Have a great day. Bye for now.
If you like this episode of Big Fat Real Estate Checks, then show some love by leaving a comment and a good rating. Also, as a thank you for tuning in today, we've got a special free gift. The journey to passive cash flow for a life starts by finding deals, and it's easier than you think. Simply go to getdealsbytuesday.com, enter your email address, and we'll send you a free quick start course called Deals by Tuesday. Even if it's 11 p.m. Monday night, this course will show you how to find discounted real estate deals by Tuesday. It's that fast and simple. Go to getdealsbytuesday.com and start your journey toward life-changing cash flow today. Thanks for tuning in, and we'll see you on the next episode.